The gross monthly distribution by the Federation Account Allocation Committee, FAAC, distributed to the three tiers of government amounted to 575 billion naira in February, representing a decrease of 125 billion naira from the previous month's payout. The decline, according to the committee, was due to significant reductions in companies' income tax, petroleum profit tax, and oil and gas royalties. Of the distributed sum, the federal government received around 205 billion naira, or a decrease of 27% from the prior month, while the gross distributions to state governments shrunk by 7% month-on-month to 238 billion naira, with the local government shares falling by 20% to 132 billion naira. The value shortfalls or subsidy claims, which have grown increasingly each month with rising crude oil prices, have underpinned the precarious fiscal situations of the federal government and state governments. However, despite several facilities provided by the CBN to support farmers in expansion and production of agricultural products, the sector's growth remains uninspiring as the apex bank's multiple monetary interventions and policy frameworks, well, many say have done little to accelerate the sector's growth. Well, I'm not doing this alone. I introduced him earlier. He's live in the studio. He's an investment strategist at AfriInvest Assets Management Limited, Mr. Temitope Omoshu. It's good to have you in the studio. Thank you so much.
Thank you.
At least we don't have to go through the stress of trying to connect you. You're here live. But thank you so much for your time, despite the fuel scarcity and the traffic and all of that. I appreciate this. 125 billion naira. It's no small amount at this time, looking at what we face as a country, down in what's to be distributed by the three tiers of government. Were you expecting this?
Well, it is largely expected going by what is currently happening to oil production. Because in December, you observe that Nigeria oil production was just about 1.2 million barrels per day. So that already, portended that revenue to the government, in fact, would actually decline. And we also saw that in January as well, revenue, oil production, Nigeria oil production also was around 1.4, still below the usual average of 1.8, 1.5, and even the optimistic case that we saw before the COVID-19 of over 2 million barrels per day. So all of this is quite expected, and the trajectory might not even change anytime soon because of different factors. So one of the factors include, or I would look at it from two different angles. One of it is inflows, and another one is outflow. That is inflow into FAAC and outflow from FAAC. So when you look at it from inflow, you talk about oil revenue. Currently, we're supposed to have a party in Nigeria as a result of increase in oil prices to record highs, 2014 highs.
111.
So by now we should have been throwing a party. In fact,
honestly,
we should begin
excess crude.
So that should have been very well celebrated. In fact, we should begin to look at economic growth of over 6%. But sadly, production is affected as a result of the what we call spare capacity. Spare capacity is quite low. As what I mean by spare capacity is ability of country to respond to shortfall in global oil supply through their local production. So globally, it has actually been negatively impacted. That's one of the factors that's affecting inflows. Another point that is affecting inflow into FAAC is as a result of low investment into the oil and gas sector. So that is also a major factor. In fact, if you look at capital importation, you observe that capital importation into oil sector peaked in 2019 actually. In fact, it peaked in 2016 when we had, when there was economic recession, and since then it had continued to decline. And it's as a result of this, the last factor which I mentioned, or last but one, is the fact that there's a global drive for ESG sustainability, and investors have been discouraged from investing in dirty energy, despite the fact that a number of African countries and emerging markets actually need returns from energy to survive. So that is actually affecting a lot of countries. In fact, except for Nigeria banking sector credit to oil sector that is about 25%, which is the largest in terms of sector, you will observe that foreign investor is not even coming. So what would have helped us was the PIA if we were able to pull through with it. And I think I would continue to encourage the government to look at reforming the oil sector, because I always talk about this concept, there's what we call time value of money. I can also say that there's something called time value of resources, because I always believe that resources that you don't consume today will become less valuable in the future. For instance, look at what oil prices were in maybe about 10, 15 years ago or 5 years ago, and the current rally we are seeing, is actually very short-lived. It's on the back of the crisis we are seeing between Russia and Ukraine. And once that crisis, just tapers, oil prices will come down. You won't have the level we had before, 2016, which is why we have to optimize all the resources that, or all the benefit we can get from oil prices. The last point I will need to mention on the inflow part is the fact that now that oil prices is going up, it will increase the competition in the international oil space. For the US shale producers, they are always complaining about cost of production, and most OPEC and non-OPEC members are usually very competitive in terms of production, but increase in oil prices will bring them to the market. In fact, they will have more money to embark on research that will bring down the cost of production. So when some nations like Nigeria are now trying to come back to the system in a bid to now supply more, shale producer in the US would have been able to cover a lot of the shortfall. And the last point on the outflow side is subsidy. Subsidy is actually taking a lot from the outflow, in addition to the fact that you look at pipeline vandalism and cost of maintenance. So when you look at subsidy, in fact, NNPC, and they've told state government that they should begin to look at about 1 trillion naira that will be deducted from the FAAC allocation to them to cater to subsidy. That alone.
Are you sure this will not affect salaries as we go? As we know, there was a point where the governor, sorry, I had to interject you, because I remember there was a meeting of the governors where they came out at a time. They even fixed the price that fuel will sell at about 300 and something naira, where they all almost agreed to subsidy removal. And now this is happening. FAAC is being hit so bad. NNPC deductions and all of that for subsidy is so much on the high side.
It's going to be a very tough time for all the 3 tiers of government. It's not the best time to be a governor. Actually, I think the problem is not just about what is currently happening. In fact, if you look at it across all the 3 tiers of government, it's going to affect each unit. When you look at FAAC allocation in terms of the recent figure to the federal government, it declined by 27%. To state government 7%, and to local government is by 20%. So when you look at that, it's already portending that there's going to be a major problem. And I can tell you for a fact that a number of states in Nigeria, in fact, they cannot meet 30%. More than 30 states cannot meet 30% of their expenses. I agree with you. So that is a problem. It's just like saying that for every 100 naira spent by most states in Nigeria, they can only earn 30 naira. So even in addition to FAAC, some of them are running huge fiscal deficit, which will even limit their ability to come to the debt market to raise funding. Because if you don't have very good fiscal sustainability, when investors look at your liquidity and solvency, liquidity is your ability to finance short-term obligation. Solvency has to do with how you can finance your long-term obligation. If you are not able to put all of these things in place, it's going to continue to impair state ability to come to the market to get money to finance the obligation. And there's no better time than now to begin to look at changing the strategy of how states are being managed in Nigeria, because we know how it's already affecting people. Standard of living, we have very few states in Nigeria that seems a bit good. They are now, you've seen exodus of people from other states into these few states, and the implication, they compete for little resources, infrastructure, inflation is excessively high in these areas. We see a lot of abnormalities in these few states like Lagos, Port Harcourt and Abuja, because there are very few opportunities in other states. In fact, let me tell you, to be precise, Lagos state income, 50%, over 50% in fact, is from payee. That means what is creating income for the Lagos state government is what? Jobs, employment and companies. So if we want to grow tax in other states, we have to create jobs. Because that is the major sustainability approach to enhancing state government fiscal position.
Which is very important.
It is actually very important.
There are also declines in companies' income tax and petroleum profit tax. I don't know, what is responsible for these two?
So for company income tax, I think, though we've seen some level of improvement, especially as a result of the improvement or the growth in telecommunication sector. In fact, telecommunication sector is a savior of Nigerian economy. I always tell people,
I agree.
because from 2010, is the sector, in fact, 2010 to be precise, the sector only contributed less than 5% to the Nigerian economy, but currently over 15%. And you observe that major sectors of the economy largely depend on telecommunication. In fact, it's one of the top contributors to CIT. And when you now look at the major sector of the Nigerian economy, agriculture accounts for over 20% of the economy. From 2010, it has continued to account for 24%, but this sector only contributed less than 1% to CIT. And the reason is not far-fetched, because the sector is largely informal. Why do we have informal sector? Why do we have agricultural sector largely informal? Because we are not seeing a lot of interest of even graduate. We are not seeing a lot of interest of skilled manpower. Is still largely subsistent. So if we need a kind of revolution, we need a kind of strategy to develop the Nigerian agricultural sector. We don't need more people in that space. That is not always the point, because whenever people talk about agricultural sector, they say they want more people. No, it's not about having more people. We need more efficient people. That is, in terms of
two different things.
So more people is different from more efficient people. In fact, if you look at labor statistics, 48% of total employment is in agricultural sector, which is very high compared to China, that is less than 30%, compared to India, less than 40%. So it tells you that it's not about the number of people, it's about the quality of people we need in that space. It's possible, once we have quality people, it will even reduce the set of people that are unskilled in that space. They'll be able to focus on other areas of the economy. So really, I think we have to really formalize so many informal sector. In fact, real estate sector of the economy that contributed significant over 5% could not contribute up to 1% to company income tax. So when you look at the problem of so many informal businesses and the fact that oil production is not, is suboptimal is compared to the budget, and even OPEC quota of 1.7, putting all this together, it actually shows that there is a lot of problem if government does not do anything about it, and it has grave implication for government fiscal position, because currently fiscal sustainability is under severe stress. I'm sure this year alone you've seen series of taxes by the government, and economists, you can easily predict this, because we call it twin deficit. Twin deficit is a situation where a government runs both fiscal deficit and current account deficit. As a result of that, government will want to increase taxes to meet up these obligations. In fact, even the current subsidy, that has been postponed, also tells us that government fiscal position will continue to be challenged, and you should expect more taxes, because government need more money. There are 4 ways basically that government finances expenses. It could be through printing of money, raising taxes, sales of assets, and borrowing. And government may not want to go the route of printing money because it's inflationary. You cannot even, it's inflationary. And sales of assets, if you want to sell assets, you will get a lot of pushback. And when it comes to borrowing as well, currently, if you look at government revenue debt to revenue ratio, quite high. Look at government debt stock, very high. So it's quite clear that the only option that seems available to the government now is to increase taxes. And in an economy where per capita income is quite low, people are still struggling. Inflation tax, you agree with me that inflation is also a tax. It's already taxing a lot of people because your purchasing power is low. So if you increase taxes in an environment where inflation is already eating into the pocket of people, then it's going to have a major impact on purchasing power. And once purchasing power is affected, it will affect profitability of companies. And how does government get taxes? It's rate times profitability. So low profitability will backfire to the government in terms of low taxes.
Let's now stay with a little with agriculture. We've seen a lot of interventions. I've spoken to practitioners about this, and I'd like you as a professional to give me your view about it. Many talk about the interventions from the central bank, a lot of interventions from the monetary side. How well, what's your assessment of what you've seen, talking about impact?
Agricultural sector, in fact, the problems with the sector, we have to dissect it to understand what is currently happening. And it is very important to emphasize that you cannot solve all problems with money. True. It's actually very important. In fact, if you look at capital importation to agricultural sector, it has consistently been on the increase. And if you also look at banking sector credit to agricultural sector, it increased from about 600 billion in 2019 to over 1 trillion in 2021. And when you add that to special programs by the central bank, you know, a lot of liquidity in that space. Although some farmers have complained that they are not getting long-term loan because, you know, gestation period of farm products must match the facilities they get. So I think the cross or the major challenge in agri space is insecurity. I think that has affected a lot of, you know, their productivity. And I also think that we have to look at, you know, beyond the problem of insecurity. I think we need more skilled people. We need more hands. In fact, I believe that we can bring agriculture low to primary level. That is, you know, in secondary school, primary school, you have jet club, you have reading club, you have science club. I think there should be a club that is called maybe the nation soul. You know, so that it gives it a kind of dignity, because when you talk about the fact that you're a farmer and people will, you know, they look at you as if, oh, you are not dignified. But we know the implication of food insecurity in Nigeria. Currently, you know what, food inflation is. In fact, it contributes, you know, about 52% to the CPI basket, and it's currently over 17%. The long-term average inflation for food inflation is 14%. So food inflation is very high. Most people spend their money on food. That shows that it is very important that we do a lot about, you know, food supply in Nigeria, food security. And another problem which we are not looking at, and which is why it is very urgent than ever, is what is currently happening between Ukraine and Russia. I have to remind you that Russia accounts for over 20% of total wheat supply in the world. And in fact, Nigeria imports a lot of wheat from them. And you know that wheat derivatives include bread, biscuit, and all of those. It's going to take a toll on Nigeria if we don't, you know, if we don't address so many issues. So it's high time. In fact, what is currently happening, you know, Germany will tell you a better story. They can tell you what high dependence on Russia in terms of natural gas is doing to them. So high dependence on even importation can really impair, you know, Nigeria food security. So I think there's no better time than now to begin to look at what needs to be done in the agricultural space. Number one thing is we have to work on insecurity. 2, we have to bring in skillful people. 3, in fact, we have to bring it down to, you know, lower levels, as low as secondary school. And I think the 4th one is important, the education. And like I mentioned, you know, farmers are complaining about the structure of the loan. I think that also must be considered.
Finally, let's try to do this in 2 minutes, if possible. Subsidy payments, do you think is sustainable, considering the fiscal deficit, sizable one that we've talked about, considering the rapidly growing debt that we are talking about, all of this and the debt burden? Do you think we can really sustain this moving on? It's
actually very bad that we still have it in place. It's not sustainable. Although I understand the fact that currently inflation is about 15.6%, and if government removes subsidy today, that could take inflation to over 20%. We saw it in Egypt in 2016 when government removed subsidy and inflation increased from less than, you know, 15% to over 30%. But currently, Egypt inflation is less than, you know, 6%. We know that it has grave implication on the people. And I think the most important thing is how to manage the strategy. Is actually quite complex. I could explain this for as long as 30 minutes, but I think the most important thing is the immediate impact. In fact, because we are looking at about 2 trillion in subsidy payment for this year, it's going to push government fiscal deficit to GDP ratio above, you know, it's going to push it to 10%, which is the threshold of the IMF, even above the fiscal sustainability act of 2017 that puts it at about 3%. So, and again, it's going to push even debt, you know, debt stock to GDP ratio even closer to 50%, currently at about 30%. Although when you look at why they say to affect debt, subsidy, there's no free lunch anywhere.
Yes.
When government pays subsidy, government has to, you know, fund it from debt or other sources of funding. So I think it's actually not sustainable. It will continue to impair, Nigeria's ability to borrow both locally and externally. So in addition to that, I'll have to say this lastly. In fact, when you look at subsidy payment, it's actually very regressive. Subsidy is put in place to address low income, right? Yeah. A poor household. But when you look at kerosene, this is what they consume the most, but there's no subsidy on kerosene. So if we actually want to give subsidy to household or poor household, it should be on kerosene rather than PMS. So now that we have, we have PMS subsidy in place, and more than, over 80% of this benefit go to the rich household. So I think it's high time we began to look at how to address it once and for all. I know that the political, atmosphere or the current leadership will have to look at the political impact before they take decisions. So it's a dilemma, actually.
Thank you so much, Mr. Temitope Moshi there. He's an investment strategist at AfriInvest Assets Management Limited. Thank you so much for your time, and do enjoy the rest of your day. I appreciate this.
Thank you.